Hello everyone, here are the latest market news on January the 31st, 2020. Pompeo set to forge relationships with Ukraine. The U.S. Secretary of State Mike Pompeo, who arrived in Kyiv on Thursday, aims to meet Ukrainian President Volodymyr Zelenskiy today on January the 31st, as he seeks to put a positive spin on relations between the two countries at a crucial moment of the Senate impeachment trial of Donald Trump. The first Pompeo's visit to Ukraine is important to highlight U.S. support for Ukraine's sovereignty and territorial integrity amid Trump's apparent affinity for Vladimir Putin and accusations that he delayed $392 million in military aid to Ukraine in order to pressure Zelensky into announcing an investigation into the Biden family. The discussions are likely to cover bilateral relations and Ukraine's conflict with Russia, gas politics, and the U.S.'s sanctions on the Nord Stream 2 pipeline, possible investment opportunities, and the progress of reforms in Ukraine. Pompeo is also scheduled to meet with Ukraine's foreign and defense ministers, as well as representatives of Ukraine's religious, civil society, and business communities. Amazon's profit climbs amid record holiday sales. The online retail giant Amazon reported its profit rose in the fourth quarter thanks to record sales during Christmas holidays. Due to the massive investment in faster shipping, the number of company's clients who took advantage of its free one-day shipping offer fourfold exceeded compared with last year. Amid this, Amazon's revenues increased over $87 billion for the final quarter of 2019, or $29 billion a month, compared with $72.4 billion in the fourth quarter of 2018. Profits climbed to $3.3 billion in the fourth quarter, up from $3 billion in the same period last year after a fall of 25% from July to September due to its costly shipping investments. Amazon's shares jumped 10% in after-hours trading. Oil rises as WHO opposes travel restrictions. Oil prices increased on Friday as the World Health Organization came out against travel and trade restrictions while declared a global emergency over the spread of a coronavirus that originated in China. Brent crude futures rose 68 cents to $58.97 a barrel after falling 2.5% in the previous session. Brent is still down 2.8% for the week. U.S. West Texas Intermediate futures were 70 cents higher at $52.48 per barrel. The contract fell 2.2% on Thursday and is now 2.5% lower for the week. Both benchmarks rose by more than $1 earlier in the session. Although WHO's decision to oppose restricting travel and trades against China boosted market confidence, analysts remained cautious and warned of further downside risks if the virus continues to spread. Global shares mixed due to WHO's comments. Global stocks struggled to recover on Friday amid investors' hopes that China could contain the coronavirus, even as headlines spoke of more cases, mounting deaths, flight suspensions, and production pauses at factories. As one of the positive factors to maintain the rebound, also were surveys showing Chinese manufacturing activity met analyst expectations in January, while services actually firmed. E-mini futures for the S&P 500 added 0.1%, having recovered 0.5% late on Thursday. European shares contracts are also expected to open higher, with Eurostoxx 50 futures and the FTSE added 0.5% each. Japan's main index, Nikkei, bounced 1%. Meanwhile, MSCI's broadest index of Asia-Pacific shares outside Japan extended its fall, declining 0.4%. The benchmark is on the way to its worst weekly drop in a year of 4.6%. Its 2.3% dive on Thursday had been the sharpest one-day loss in 6 months. Hong Kong's Hang Seng fell 0.3% and has slumped 9% in the 2 weeks since the virus began impacting on financial markets. Korea's Kospi had its worst week in 15 months, losing 5.6%.